Flag of the big movers and shakers today in trade, and starting off with ICICI Bank, second day on the trot that we are seeing red on the screen. On this stock, the stock price has definitely fallen. And remember that we had the provision figure that had come by, which was definitely, I think, something that did spook the market quite a bit. So yesterday 5% gone, today another 3% gone. Tech Mahindra, now this is a stock in focus because it came out with its numbers yesterday in after the market hours, and you are seeing the stock price as well react in trade today. But mind you, in the green, it's taking along with it the rest of the technology back as well. Better than expected revenue, EBIT margins as well were better than expected at 10.1%, largely due to the absence of a one-time charge QOQ. There was, of course, contraction in manufacturing and telecom, which are Tech Mahindra's key verticals that it caters to. So that led to the drop in revenue. But again, strong execution. Worst is behind the company. However, there may be some fears with respect to 5G being delayed. IndusInd Bank is a stock in focus as well. Yes, we are waiting for the Q1 numbers. But, today's ET has reported that in all probability, the board meeting will also discuss fundraising. So we are perhaps looking at Route 1 investment coming through in IndusInd Bank. Remember that it had recently received some clearances. So we are perhaps looking at $400 to $500 million, being raised. This is, of course, an ET report. All right, UltraTech Cement, meantime, it has delivered its, it is now going to deliver its Q1 numbers, and we are expecting a fall in revenues over there. We are also expecting margins being compressed at 23% versus 25.3%. So lower volume growth will also drag EBITDA. That's on UltraTech Cement. On that note, we will take a very short break on the show. Welcome back. You're watching the newsroom on ET Now. Time for our ET Now Insight Corner. The Nifty has rallied almost 50% from the 52-week low, but there is some signs of fatigue being witnessed in the last few days. So the question is the rally fading? Jayesh Khilnani joins us.
One of the parameters to gauge the underlying strength or momentum that we've had in this particular rally is to actually look at the trend of how the Nifty stocks have been oversold or overbought on their RSI. And the first chart will actually show you that currently there have been 44 days where none of the Nifty stocks have been oversold. Now, this is the first instance or the longest stretch that we've had since 2009. So going forward, how does this actually play out for the market? Let's have a look at few of the instances in history and map out how the Nifty actually behaved. You have April 2019, where you had 43 days of none of the Nifty stocks being oversold, and the market going forward corrected about 5%. In November 2013, also similar instance happened, 43 days at that point in time also, and the market corrected about 3%. Then you had 6th of March 2012, where the market actually clocked about 40 days of none of the Nifty stocks being oversold, and going forward the Nifty actually corrected about 7.5%. 1st of October 2009 was the last instance that we had 56 days of none of the Nifty stocks being oversold on the RSI, and the market actually corrected about 10% going forward. So if history is to go by, this rally does look like it is fading away, and we could be in for some either consolidation on the sideways movement or some bit of downside on the Nifty.
All right, UltraTech Cement has come out with its numbers. So let's look at what the numbers look like at this juncture. Okay, I just have the the console numbers, the standalone numbers rather right now. 7,633 crore rupees versus 11,419 crore rupees. Remember, I just have the revenue figure for now. And remember that we were expecting almost a 36% drop in the top line for UltraTech Cement. We were expecting the number at 7,300 crores. They have delivered 7,633 crores. So it's a 300 crore beat on the top line. On the profit after tax front, okay, quite a big beat over there, because we've got a number of 797 crores versus 1,281 crore rupees. So definitely much better than the ET Now poll, which pegged the figure at 470 crore rupees. I wondered if there is any I wonder if there is any sort of one-off item that is affecting the bottom line. Okay, that number has been revised. It's 805 crore rupees. My bad. The standalone profit after tax is 805 crore rupees versus 1,267 crore rupees. But nevertheless, it's still significantly above the ET Now poll. In fact, close to double the ET Now poll, which pegged the figure at 470 crore rupees. Now, no doubt, there is going to be the lower volume growth, which is going to impact the top line, as is the case we had seen in the other cement companies as well. And to make it worse, realizations as well didn't really support. In fact, they were more or less flattish in the quarter gone by. So both of these factors have led to a decline in the top line, but there's definitely been great performance on the bottom line. But like I mentioned, what has it been on the EBITDA front is going to be very crucial, because if the EBITDA is something that has come in line with the ET Now poll or below the ET Now poll, then definitely the bottom line has been hit by some one-off items. The management has also said that they have managed to achieve 60% capacity utilization in 68 operating days post the lockdown during Q1. So 60% capacity utilization, still of course much lower than what it was pre-COVID. It's going to take a little while before they get back to that. In other factors, what were we expecting from an UltraTech Cement, apart from, of course, the revenue and PAT figure? And yes, I will wait by for that all-important EBITDA number. The realizations are expected to be in the mid to high single digits. Volumes could perhaps decline by 35% on a year-on-year basis. We don't know that yet. And yeah, realizations are expected to be largely flattish. So that's, of course, on UltraTech Cement. They have said that they've kept tight control on costs and cash flow. Vivek Iyer joins us now on the show. Vivek, revenue seems to be in line, but it's quite a big beat on the profit after tax. Have you had a chance to look if this is being led by a beat on the margins, or if it's a one-off item that's hitting the bottom line, or rather boosting the bottom line?
Well, Mubina, when you're talking about UltraTech Cement results, it is pretty much similar. The story is being repeated across most of the cement companies. Remember, ACC as well as Ambuja, when you're talking about the results over there as well, you actually saw very tight cost controls, good realization trends. And also when you're talking about low petcoke prices and low input costs, this is something that have aided the margins. So you're talking about the actual revenues coming in line to actually slightly below what the market was anticipating. But this is not something too much of a surprise. Most of the market polls were anticipating a little over 30% volume decline. So that is something that has come in line to slightly below what the market was anticipating. Remember, it's been a washout quarter as far as construction is concerned. Given, the realization trends, a 25 to 30% volume decline is something that we would not be surprised by. We are still waiting for the volume figures, that will come in the result presentation a little later. You're talking about the EBITDA. EBITDA has come in way above what the street was anticipating. Three key factors: strong realizations, input costs have been kept under control, and also lower petcoke prices. This is something that have aided the margins. On the back of that, you're talking about the net profitability almost coming in double of what the ET Now poll was anticipating. Very, very strong set of results. The entire cement universe is seeing a re-rating, and you've actually seen ACC, Ambuja, most of them rally. So, watch out for UltraTech as well. Very good set of results. We'll come back with more details, once we have the volume figures and the result presentation and the management commentary also does come out.
All right. Okay. So volume number is now the only thing that's awaited, but otherwise it's a great set of numbers, control over costs, and in all probability the high realizations that have managed to aid the margins and consequently the bottom line as well. We have with us Abhishek Jain of BP Equities to talk about these numbers. Abhishek, let's get in your takeaways from this, especially that big beat that we witnessed on margins, on bottom line. Is it the solid control over costs? Because if it is the higher realizations, it's not either being reflected much on the top line, or again the volumes have maybe maybe disappointed or have come in maybe a little lower.
We have seen in June, especially in the month of January, June, the prices were very stable and very firm especially in the eastern part of the country, and especially in the south also there was some recovery was there. On the central side also the price recovery was very strong in the end part of the May and June. That's why the realization number is quite high right now. And this is, I would call it 3 out of 3, because all three companies in the cement, if you see ICICI, Ambuja and UltraTech, all three have posted good numbers, the good cost control. Most of the companies have cost. Hello? Hello?
Okay, unfortunately we just got the, I think we've just disconnected that phone with Abhishek. Perils of live television, but definitely a big thumbs up for UltraTech Cement. We'll be back to talk about the volume number as in when it's released by UltraTech Cement. For now, it's a goodbye from us.